If we look at the world 7, 8, or 9 years ago, most of the people say that the banking and the money business was a nightmare to them. But right now, there are a lot of people who are enjoying this. What actually happened? We think that fintech happened. Fintech revolution happened, the biggest revolution in the banking history we have ever seen. And there are going to be a lot of losers and there are going to be a lot of winners. And here we are today to preview that Finvolution can be and keep its position as a front runner in this industry. Honored member of the juries and dear audience, my name is Zorana, and I'm joined here today with my colleagues, Milica, Lazar, Sergey. We come from the University of Belgrade, Serbia, and we're shaping the future of Finvolution. Our goal today is to broaden Finvolution customer base and provide more technology as a service, as well as in the current and in the foreign market we have chosen. Through our analysis, we've identified some issues. Our main issues are the government regulations, which are changing on a monthly basis from region to region, from country to country, and very intensified offers in these finance solution towards customers due to the fact that this is still emerging a new market. We're proposing two strategies: Magic Cash, new offers to customers in Finvolution Chinese current market, and Magic Indonesia, expansion on the Indonesian market. We are expecting to see increase in 30% of revenue and increase of plus 11% in return on investment. Let's dig deeper into our analysis. We see that fintech industry is disrupting this global market with innovations. CAGR is expected to be 7% into the next 7 years. We see that Asia Pacific region is becoming a hub for fintech innovation. It is known that 7 out of 10 biggest fintech companies are located here. Government is incentivizing towards cashless transactions, which is resulting in huge number of credit and debit card holders. And we see that customers are expecting omni-channel approach in this field, as well as in the e-commerce, which is rising in this COVID-19 situation that is emerging right now. And how do we see Finvolution? We see that Finvolution right now is offering two business segments. It is offering B2C segment, financial services, and it is offering financial improvement, B2B segment. I will go deeper into the analysis of the B2C segment. If we see how does the traditional model look like with the borrower and the bank, we have a borrower who needs a loan, and we have a bank on another side, which requires a very long process, a lot of administration. They usually do not have enough data for generating credit responses, and they're using the Pareto model. They're competing for 20% out of their whole customer base, which is in China, 900 million people. We see a huge amount of underserved customers, and they're in need for immediate money and for the small amounts. And this is where the Finvolution comes. It has been filling the gap between those bank offerings and customer preferences and needs. We see how does the Finvolution functions. It has a borrower on one side and P2P model, as well as a financial institution as a loan origination on the other side. It is offering immediate assets, most of all, and the most important, assets for all, and stable and low-cost funding. We see that Finvolution has been serving these underserved customers. However, we see that there have been some very big changes in this market. Government's regulation totally changed Finvolution's business segment from loan originating from peer-to-peer towards financial institutions. We see that from 2018 to 2020, they have completely disappeared, P2P. Therefore, the whole business segment has been changed. When we dig deeper into the customer segment, we see that their age from 20 to 40, they're either millennials or Gen Y, and we see they're in need for efficiency, in need for convenience, and there are big smartphone users. Market penetration in this market is above 70%. Therefore, we see an opportunity to expand Finvolution capabilities in order to successfully serve these borrowers and penetrate this market even more. I'll give it off to my colleague Milica to furthermore explain B2B segment.
Thank you, Zorana. So, while we analyze FinVolution portfolio, we cannot ignore the potential of fintech empowerment. This B2B segment is consisted of risk rating model, AI data report solutions, Magic Mirror anti-fraud platform, and consumer credit solutions. These solutions together, or even each separately, are huge potential for long-term strategy for FinVolution. Why do we see this segment so important? Basically, customers can scale up or down throughout the course of their subscription term, allowing them to adjust to changing business conditions. This kind of optimization is needed in many industries and even for governments. With current situation, we cover only financial institutions. Moreover, FinVolution could be proactive in finding new companies for this B2B segment, also with adjusting AI for data of companies that already been partners. For example, you can create clusters of companies with specific needs of technology that you can provide. However, we did not focus on this solution due to challenging implementation plan and some barriers that could not be mitigated at this point, but we see this as a huge potential for the long-term plan. Now, take a look into strategic alternatives that derive from FinVolution portfolio. Situation is changing due to government regulations, so FinVolution needs to adopt, and there are four ways: providing a new service, providing a new feature, finding a new customer, or expanding on new markets by selling Bright Mirror abroad. For the services, we prioritize Magic Cash and going abroad with one part of portfolio because of the fit with existing technology and minimal additional costs. I will pass it to Sergey and Lazar to tell you more about our strategies, Magic Mirror and Magic Indonesia.
Thank you, Milica. Like we mentioned in our analysis, due to the fact that this tight regulation on P2P lending has dwindled our P2P lending branch in China, we asked ourselves what is the next step. During our research, we have discovered that 82% of small to medium-sized business failures are due to poor cash flow management, and that more than half of them report that cash flow is a challenging task. That's why we want to create a new service for our B customers that we can later expand to our C customers as well. Small business owners often lack cash flow management knowledge, and accountants are not managing their cash flow well. So it looks like they really need a finance manager on board, yet often they cannot afford it. So what if we offered them a finance manager's services for the price of one large coffee a month? We want to introduce you to Magic Cash, an online virtual finance manager for small businesses. Having in mind the problems of our B customers that are facing, we created a seamless, easy to use service that acts as an add-on to online banking that is based on existing technology and that has a possibility on achieving cross-sell scenarios for our clients' needs. Main functionalities: invoicing, expense registration, automated OCR, automated booking, fast and easy payments, debt collection, cash flow management. Although we don't have the time to show you all the functions here. But imagine this. In one place, our client can see his 4-week cash forecast. Green means okay, yellow means a warning, and red, you have to take action fast because cash shortage is coming. On one place, our customer can see all of his financial obligations and payments he expects to receive. If our client is faced with a situation that, for an example, there isn't enough money to pay expenses in the next week, our service recommends, for an example, 3 possible solutions. He can collect money from his non-paid invoices, or he can use factoring, or he can take a short-term loan and gets directly diverted to our existing Magic Mirror and Bright Mirror technology solutions. We believe that this also represents an opportunity to further expand our services to financial institutions that we are already partnered with, since our services are mostly based on banking and accounting data. Benefits for our possible bank customers would be that they could make their end customers' lives much easier, attract new businesses to their branches, and increase customer loyalty and sell more banking products. To attract and place our services to a broad audience, we want to target our existing and new customers. For our existing clients, we are planning to educate them through our application, as well as target them through our existing communication channels, like app stores like Google, Google Play, and Vivo, and search engine optimization by Baidu and Sogu, and online advertising like WeChat, Twitter, and TikTok. Having in mind that Chinese on average spend 358 minutes online per day, and that social media and content account for 2/3 out of that time, we want to focus on these channels primarily. So we want our partnerships to be with key umbrella groups or incubators of key opinion leaders. We want to create a clear benefit to our potential customers through short time lapse and challenges on TikTok videos to increase adoption rate of this new service. But having in mind the time, more on that on Q&A.
Thanks to my colleagues. Now let's talk about our second strategy, entering new market. So let me explain why Indonesia. It's obvious that we pick Indonesia, Magic Indonesia. We compare these four countries, Vietnam, Philippines, Indonesia, and Singapore through these chosen criteria. GDP per capita, bank account percentage, and number of smartphone users. So we set the number of smartphone users to be our main criteria because of Finvolution primarily services as a fintech company. And we agreed that Singapore, with only about 4 million users, is not our first choice. Then we analyzed GDP per capita, and Philippines were out of the game too. Then, between Vietnam and Indonesia, we thought that 83.9 million people with smartphones and $3,998 GDP per capita are huge potential market. So Indonesia it is. Also, to be sure that Indonesia is the best choice for our market, we listed some more factors and trends. Here they are. Finvolution Indonesian subsidiary received the company's first international license for P2P model, so period of adaptation will be easier there. Fintech is on a high level in Indonesia. Then we have a lower transaction fees. What that means? To reach underserved segments and provide everyone lower transaction fees, government enhance the access to financial services in Indonesia. And then high restrictions. Small and medium business are having a hard time making use of particular banking service due to highly restricted bank loans. And in the end, customer behavior. The shift of customers' behavior towards digital services is obvious. Now let me explain what fintech gonna do in Indonesia. As I previously mentioned, fintech got a license in P2P model, and 50% of people in Indonesia wants to lend money. So you will enter the market focusing on your institutional lending service. Now you want to know how you will do it. Joint venture with smaller commercial banks, also rural banks, plus microfinance institution will be the right and the first move for Finvolution in Indonesia. And to conclude why we think this is the best idea, there are benefits for both sides, Finvolution and medium-sized banks. Both will get new customers, and plus bank will get needed technology and experience. On the other hand, Finvolution will get new data for the Magic Mirror and Magic Bright systems. Then, who will be targeted in Indonesia? First of all, B2B segment. Finvolution will introduce loans for MSMEs, primarily on Sumatra and Kalimantan, because they are leading potential lending markets. And for the B2C segment, Finvolution will keep private loans as first choice, but you need to make it personal by targeting these three sectors. And why these three sectors? Because they are listed high on the household consumption expenditure list in Indonesia. Now I will leave it to Milica.
Thank you, Lazar. So for complete analysis of our solution, we identified main risks. We mapped them out by impact on solution and possibility for it to happen. So we have three risks. First is having hard times finding compatible joint venture with banks on international market. Second is slow adoption from Indonesian users due to new culture and target group. Last one is an underestimation of Magic Cash as a new service. For mitigation, we have planned to find other partnership model, perhaps better for the situation than joint venture. However, according to the PwC report, banks in Indonesia are very much open for joint venture because of costs for them to have all the data that we are providing. For last two risks, we believe that more intense marketing campaign could force people to try our services, for example, because of free subscription period or other benefits. For implementation plan, we have activities for both strategies that are going in the same time, like adjusting AI solution and finding potential bank on Indonesian market. We need 1 year to set up our solutions, and for the next 2 years, we are piloting and focusing our marketing strategy on acquiring new customers. By adding Magic Cash, we added new revenue stream in our portfolio. For the number of acquired people, key assumption was that there is a global trend in demand for accounting and tax advices. From our current 18 million borrowers, in the first year, 10% will be reached. Half of the users will use free subscription plan because of the marketing campaign. Other half is segmented in paying customer and SMEs, which are differentiated by the price for the Magic Cash. One more stream of customers is from non-user of current loan activities. We can gain 400,000 of them with new pricing. Our other revenue stream is from Magic Indonesia. In the first year, we are focused on 2 regions. With smartphone penetration of 31%, we will reach 10% of the population in those regions. This is equivalent to 8 million of reached customers. Their fees for loans are less than 1%. So our revenue will reach 70.6 with 30% CAGR 2019 to 2023. Profit will be 940,000 with CAGR 33% between 2019 and 2023. Costs that are included for both strategies are operational costs for new market, legal costs, consulting costs also for new market, adjustment for AI solutions for Magic Cash, additional marketing costs for our campaign, taxes, and sales costs. I will leave it to Zorana to wrap it up.
We believe that with our 2 strategies, Magic Cash and Magic Indonesia, we will be able to overcome the specific issues that are jeopardizing this whole industry in terms of government regulations and a very huge competence in this emerging market. And we believe that we will succeed our goal of broadening the base and offering more technology as a service and reaching the 30% increase in revenue and 11% increase in return on investment. However, CEO of the Finvolution mentioned that the Finvolution wants to become next Amazon in the fintech industry. Therefore, as the Jeff Bezos said, he would definitely regret if he failed, but he would regret for the rest of his life if he has never tried. So why not try and make the magic happen with Magic Cash and Magic Indonesia? Thank you for your attention. We are open to your questions.
Thank you for your presentation. Now is the question and answer session. We have 15 minutes.
So thank you very much.
Let's have the first question. Yes.
Thank you very much for the presentation. Going back to the virtual financial manager slide, can you just give me more details in terms of numbers and operations, in terms of how would that actually work, in terms of how many people you need to employ, what are the details, how would you actually do that?
I'm sorry, can you just repeat the question because there is noise behind?
Yeah, apologies. So on the bit about virtual finance manager, can you give a bit more details on that in terms of how many financial managers would you need to hire? What's the ramp up rate, the training? How would the technology work in that scenario?
Thank you for that question. We can start with the technology that we are using. We saw in the case material that the Finvolution already is going strong with AI technology by giving the near $30 million in R&D sector for AI improvement. So we are seeing that AI can be used also in giving advice for like cash manager, and we have benchmarked the cash director, which is also using the AI solution for this activity or service. So we are not actually planning to employ the people who are going to give advice about taxes or generally cash flow, but we are going to use technology so that will have just a second to follow your activities on monthly basis, like your incomes and your costs per month. So it will in the end give advice where you can improve yourself or some other advices.
If I can build up on what Milica said, Finvolution has been using robotics and AI for a long period of time, and customer satisfaction is over 98.5%. So therefore, we believe that Finvolution's technology will be able to serve our customers with no additional employing, but just with the AI and the robots.
Okay, so just to follow up on that one, the model that the AI was trained was based in China, right? So how are you going to do that for Indonesia? There are different cultures.
In our first phase of entering the Indonesia, we will be definitely focusing firstly on the financial institutions loans origination, and after the whole system works, after we have developed our customer base, then we will in the second phase introduce the cash, the magic cash, as it was done in the Chinese market. So it won't be introduced at first, but in the second phase. Therefore, we'll be able.
More specifically, you have an AI, you need to train it. How would you train it? So it was the original one was trained for Chinese customers. How would you train that for Indonesian customers?
We understand that the different markets mean that there are different cultures. We believe and we know that for each market we need a separate engine. But we also believe that there needs to be time for our AI to learn from scratch from Indonesian consumers. And we want to start with, like we said, when we partner with with banks in Indonesia, we have access to their data, financial activities and data, and for slowly to give it time to slowly learn the Indonesian financial activities by heart and give in time recommendations.
So basically, we want to. Our first strategy, Magic Cash, will primarily be focused on the Chinese market, and then in this, let's say, second phase in entering Indonesia after our financial lending services, then we will introduce the Magic Cash, and we think that it's enough time for our AI database to learn how to work in Indonesian market.
There's a big focus in Indonesia to micro and medium small businesses, and we think that it is with strategic alignment with Finvolution to really focus on developing these medium to small size businesses, also taking into account consumers' access to credit. They're around 74% of total businesses, which accounts out of a maximum of 63 million businesses don't have access to credit at all. Also, we believe that with our financial services in time, we can help these small businesses be as effective as they can be, and also give them credit or easier access to credit.
Thanks. I'm going to ask an opportune question. While you were on this slide, what's the when's break even?
Yes, I can take that question. Actually, we don't have the graph showing the break-even point, but we calculated that to be 2021 year, because in the first year we need to have like higher costs for upgrading the AI solution, because current AI is just using for loan activity, and we need upgrading of that, and we need 30% more of current costs for the that is in the R&D segment that are previously mentioned. That is the cost driver for this break-even time.
So I'd like to kind of switch gears a little bit, because as you may have heard from our backgrounds, I'm not as much of a numbers and a business person. But I think I'm struggling to understand what Magic Cash is. Can you explain what that is?
Can we go to the slides? Yep. So yes, thank you very much. So basically, Magic Cash is an online virtual finance manager for small businesses. Our businesses, we want to make sure that businesses have the capability for our finance manager to do everything for them. So they don't have to do their invoices, expense registration, booking, fast and easy payments, everything that the finance manager does. We want to automate it and do it for them, so that they have everything on one place, so they can get loans, or we do their financial activities for them.
Okay, so it seems like this is kind of serving as almost like a virtual CFO or someone in a finance office. I mean, what am I getting out of it if I'm a buyer, right? I mean, I think are there really banks? Are there really companies that don't realize cash flow is low and need a software to tell me and make it yellow or red? Who's your buyer here?
Okay, so if I can follow up on that, as we concluded from our case and from all of the information we have collected, we see that above 70% of the young people in China, they want to start a startup. They wanna be entrepreneurs, and most of them are facing with their first loans. Most of them are facing with their first finance things. Therefore, most of them are lacking the experience. So that's on our one side. But as my colleague Sergey mentioned before, this service will not only be offered to the small and medium enterprises, it will as well be offered to a specific consumer, in the B2C model. A lot of people that are, as I mentioned before, are aged from 20 to 40 with the first loans and convenience. So basically, it's offering just a help with their regular life and their regular checking up on their finance.
So you're talking personal finances and expenses for the B2C part of the product, is that right? Okay.
Yes.
So
oh, sorry, go ahead, Aman.
Go ahead.
And is there a sense of so I guess a similar question there, you know, I open up my bank account online and I can see what my balance is. How does Magic Cash help me as an individual? Because I don't, you know, I see automated OCR and debt collection. You know, I don't really have any outstanding debts I need to collect. And I'm not really scanning receipts into my bank statement. So can you tell me a little bit about how this product would help me as a consumer?
Yes, as Sergey mentioned, you will have some proposals in the end of the month. If the color is red, you will have some, let's say, you can get a loan, you can collect some money and pay your debts, and it will be like the personal assistant for you if you don't know how to solve your problems and issues with your financial status. And Sergey could explain the like colors in the app, how it will function.
Yeah, so basically our main data point and our key assumption is that Asian customers or Chinese customers, for this example, are willing to give up their data or their expenditure. So we believe that this is our main driver for our also our benefit and opportunity for Finvolution to learn more and deeply about Asian consumers and their financial activities, and possibly give them recommendations, or maybe if they want to have an option to, I don't know, save money for a certain kind of investment for maybe a car, a house, or something like that, that they can give them like an automated chatbot type of personal finance manager that is completely online. So this is applicable for consumers. This is applicable for businesses. Also, we believe that our potential next customer could be banks. And this is maybe more easy to understand where is the benefit for the Finvolution and the banks or financial institutions themselves. So these are our main assumptions as we developed our idea.
Hi, if I may just ask on if you go to the last slide with your revenue and profit predictions. Yeah, so if I could just ask the split between your intended approach to Magic Indonesia and Magic Cash. So just visually, it looks like in terms of revenue, Magic Cash is going to be the dominant driver. Magic Indonesia much smaller, while the profitability looks fairly even. Could you give me some splits and as to the drivers of that? So if from the looks of it, Magic Indonesia is going to have a much higher profit margin, then why wouldn't you want to go bigger into that?
We understand that there needs to pass time for, like we mentioned before, for our AI to develop. We see that Indonesian customers would see the benefits of our services, and we want to gradually expand our services as time progresses. But we thought that, or our key assumption in presenting the revenue streams and finances like this is because we believe that there needs to pass time for our AI solutions in Indonesia to develop, to learn, and to be as reliable as possible. So that is why we presented them this way. Maybe Milica can expand more if needs be.
Fair enough. If you wouldn't mind, so what is the profit margins on each of those?
Milica, if you can again just follow up on this for a second, then Milica can get to the profit margins. Firstly, we will focus on some of the smaller commercial banks. That's why our customer base in the very beginning won't be so big. We're not focusing on the big banks. Therefore, we need a lot of time to get the new customer base.
Okay, you have 27.
Yes, thank you for the question about the revenue and profit percentage in Magic Cash and Magic Indonesia. Actually, for the revenue, we see the 16 and 40% in the share of Magic Cash and Magic Indonesia revenue, because in the Magic Cash we have established target group in Chinese market, and we see the adoption of our new service is going to be much easier, and the costs that we need to pay, I'm going about the profit now, costs that we need to have about Magic Cash are higher because we have, as I said, upgrading AI solution for the other service, because current AI solution is not established for our AI providing service that we want to upgrade, like advising and financial manager. That's why
I'm sorry, I have to stop you. Time is up. Thank you very much for the team. Thank you very much for the judges. That's the end of the Q&A session.